Good evening, traders. I am Devang Mehra from the Financial Analyst, and welcome to the Bold Project. In this module, we'll discuss about the global markets and what is the correlation of the global markets with the Indian markets and how do those markets affect us. Essentially, we will also talk about what are the global markets that we have to track. To give you a background, it is not enough for a trader or an investor to just look at the Indian markets or just to look at the stock you want to trade. For example, it does not make sense for you to wake up at 9 o'clock in the morning, open the charts of Maruti, and decide whether you want to buy or short. That would be a very wrong way, if I can put it that way, to invest in the markets. What you have to do if you want to become good in the market, if you want to make consistent money, what you have to do is you have to track what the economies of the world they are doing. How is the dollar doing? How are the volatility indices doing? All of these things we will be discussing today, and I'll try to make it as simple as possible so that the viewers who are new into the field of finance, they can have a hold on this concept. So before I get into this concept, let me explain this area over here. So in the last three modules, we have discussed about the TradingView platform, investing.com platform, and the time frame. But we have right now missed out this watch list. So I'll just explain what this watch list concept is, and then we'll get into the global markets. So when you open your chart, you will get something like this. If you click on this watch list option, you can enlarge your screen. So once you open the TradingView platform for the first time, you will get your chart, which looks something like this. To open up the watch list, you just have to click on this top right option of the watch list. Once you click on that option, something like this will open up. Obviously, when you open the chart for the first time, it will not be filled, but I will give you a hang of what it looks like. So I'll just create a new watch list to give you an hang, the Bold project. I'll just make a watch list called the Bold project, and I click on save. So when you open your chart, this is how your screen will open up. It will say watch list 1 and something like this. Please remember, in the free version, you are only allowed to make one watch list. If you do want to make multiple watch lists, you can try out the paid version. I will discuss in the course of time in the advanced training sessions how to create stock specific watch list, but let me give you an idea how things are. Why do we need a watch list? It's very, very simple. If you do not have this watch list option, it is very difficult for you to remember which stock to track. For example, I might like to check the stock of ITC, charts of ITC right now. But what do I do after ITC? I do not remember. See, I don't remember personally what I had for lunch yesterday. I certainly am not going to remember what are the 10 stocks I need to trade today. So to make that memory part of me very easy, I click on this watch list option, and according to the strategies we teach you, according to the methods we teach you, you can build up a watch list. So for example, I put up ITC in the watch list. You can click on the plus icon again. Let's put Reliance in the watch list and click on enter. You can add a couple of more stocks. For example, Hindustan Unilever. We'll add the top companies, 5, 6 companies, and I will give you an idea of what I'm trying to tell you. Infosys, etc. So I've added 4 companies in my watch list. So now what happens is, rather than clicking over here and searching for the company, which is a very tedious process, I can, first of all, I can see what is the live price going on in the market from this tab. Secondly, I can just click on the second icon and I can immediately stick to the next chart. Immediately I can go to the next chart. So this is basically facilitating ease of my trading business. So I can save my time and I can make money. I can see which stocks are moving, how much they are moving, and accordingly I can trade on them. So I will show you, I have made a lot of different watch lists. The first watch list I will recommend you all to make is called Indian market indices. So what have I done here? If I click on the Indian market indices, you will see something like this. I have basically added all the Indian market indices. Index basically means a group or a basket of companies. So for example, Nifty is your top 50 companies in India's index. The bank Nifty is the top 30, the top banks by market capitalization index. So if you want to know which all indices are available, I would suggest you go to moneycontrol.com, and there you can click on indices option, indices, and there all the indices that are available will pop up. So just to name a few, there will be something like Nifty Private Bank, Nifty Service Index, Nifty Real Estate, Nifty PSU banks, Nifty Pharma, Nifty Metal. So basically Nifty Pharma means what all companies are in Nifty. What are the top companies in pharma? Nifty FMCG means what are the top consumption stocks in India? Nifty Commodities, what are the best companies dealing in that sector? Nifty Auto and Nifty IT. So there are about 10 to 15 indices there. So why have I created this index? It is very simple. I wake up in the morning at 9 o'clock and I can see, I don't have to scan 500 stocks. I just have to open my Indian market indices and I have to see what index is performing and I can accordingly trade. So for example, today I can see that Nifty Private Bank was not doing good. So I can open the charts of HDFC Bank and look for a short opportunity. At the same time, I can see Nifty FMCG is doing very good. So I can open some FMCG company like Dabur, ITC, Hindustan Unilever, and look for a buy opportunity, look for a long opportunity. So I hope this concept is clear. This will really help you to save a lot of time when you wake up in the market and decide what you want to do depending upon how that index is performing, how those basket of companies on and whole, how that industry is performing. The other thing what I do is I've made a couple of indices, for example, pharma. So since pharma was in focus due to the COVID times, I made a watch list of all the pharma companies. So you can click on plus. I added all the pharma companies and I made a watch list. At the same time, you can hover over to the left of these companies and you can click on this tag. If you click on that, you can see you can place a tag. So I have placed a couple of tags. So for example, a red tag for me means I want to buy that company. A green tag for me means probably I'm already holding that company. So depending on how you want to remember, because there are tons of companies, I want my attention to be diverted within a second. So if I make this company a red tag, I know I have to buy this company. So I will pay more attention to it. Green probably means I'm already holding these companies. So I'll pay attention to, to it like that. I hope this concept is clear. This is what a watch list is. I have another company, what is called holdings, or some companies I'm currently holding. So I'm marked in green and red according to how I want things. Red is basically something I want to buy in the future. Green is something I'm already holding. So something like that. So you can create multiple watch lists. This will help you to navigate, to different stocks in a matter of second. And you can, track how the stocks are doing live in the market. You do not have to open your phone and see. You do not have to go to multiple stocks chart and see. This will help you to keep a track on the market. Also, you can download the application of tradingview.com on your mobile phones, which will help you when you are on the travel to analyze stocks. So I hope this watch list concept is clear. Do make sure you make that Indian market indices watch list to help you in your trading analysis. So that is about watch list. Now let's talk about what are the markets that we have to track outside India, because it is not enough for us as a trader to analyze only the Indian markets. Always have Nifty and Nifty Bank in your watch list. You have to have that, because Nifty. So if I'll give you a simple rule, if Nifty is going to fall down, majority of the stocks in the market will fall down. It doesn't mean all the stocks. Please remember, stocks which are not fundamental catalysts, they will fall down. What are fundamental catalysts? You will learn in the video of stock selection. But just to give you an overview, if Nifty falls down, Nifty is the top 50 companies in India, then majority of the stocks will go down. If Bank Nifty falls down, majority of the banking stocks will go down. So currently India is, we are focusing much more on the financial sector and the consumption sector. So we need to see the Nifty Bank indices and accordingly plan our trades. We can't go long on a stock if Nifty is down 2%, because majority of the stocks will be down. So make sure you first always analyze what Nifty and Bank Nifty are doing before you plan your trade. Next we need to see a couple of global markets. So I will start with the American markets. The first market that I want you to track is called the Dow Jones Industrial Average. This is the top 30 companies in America by market capitalization. So this is the ticker for this is US 30. You can search it and put it in your watch list. So I want you all to track Dow Jones Industrial Average, the top 30 industrial companies in America. Then I want you to track the S&P 500. This is a widely tracked index in the market. Basically, like how in India we have Nifty, Sensex, like that in America we have Dow Jones for the top 30 companies. S&P 500 includes top 500 companies in America. And finally, we have the US 100 called the NASDAQ. This is particularly tracking the IT companies in America. So the IT companies, say NASDAQ, there are 100 companies, and majority of these companies are IT companies such as Facebook, Microsoft, IBM, Amazon, etc. So all the IT companies are here. So just to give you a basic idea, these are 3 American indices I want you to track. When do they open? They will open at 7 p.m. Indian Standard Time. So 7 p.m. these markets will be opening Indian Standard Time. You have to remember that. Number 2, I also want you to establish a correlation, before I forget, of NASDAQ and the Indian markets. NASDAQ, as I said, is a basket of majority IT companies in America. So Indian markets also will be affected by the NASDAQ, particularly your tech stocks in India. The technology stocks will be affected by NASDAQ. So if NASDAQ is going higher, so if NASDAQ you see is going higher, then tomorrow the Indian market technology stocks such as Infosys, TCS will also go higher. I hope you understand that concept. The Indian market timings are 9:15 to 3:30. That is the Indian markets time. The American markets, they open around 7 o'clock, and I believe they go until 1:30 a.m. in the night. So if you see in the night that NASDAQ is on the higher side, it's on the positive side, that will mean that the technology stocks in India on the next day will be opening higher. And that's basically one thing I want you to know. Also, I want you to track the UK markets. The UK markets are called FTSE 100. This is basically the ticker is UK 100. This is the top 100 companies listed in the United Kingdom. So I want you to track. I also want you to track the DAX. DAX 30 is the ticker for that. This is the markets of Germany. They basically encapsulate the top 30 companies by market cap in Germany, listed in Germany. So what are the timings for the UK markets? These markets are basically the UK and the German markets. They open Indian Standard Time at 12:30 p.m. So when the Indian markets are open during the midway at 12:30 p.m., the UK markets and the German markets will be opening up. So these are 5 markets I want you to track. Yes, you can track the Paris markets. The France markets are called CAC 40 for your reference. So you can track that. I do not track it very vigorously, but these are 5 markets I do track very vigorously. Also, you can track the Asian markets. Again, I do not track them very vigorously because Indian markets and Asian markets are open around the same time, but you can track 2 markets in Asia. One of them would be in Japan, which is the Nikkei, and also you can track the Chinese market or the Hong Kong. Hong Kong is Hang Seng. China market is the Shanghai Composite. So you can track those markets as well. But as I said, I do not keep a very close watch on the Asian markets unless until some news opens up in these Asian markets. Now, what is the correlation between these markets and Indian markets? It is very simple. The Indian markets do not move in isolation. What do I mean by that? Unless until we have a domestic event. So for example, we have Bihar elections coming up. We have, let's say, Indian Prime Minister elections coming up. Unless until some big domestic events. For example, currently we are in the Q2 earnings. The July, August, September earnings season going on. That's a domestic event which will impact the Indian markets. The GDP data in India might be out in this week. The IIPA data, which is the industrial production data, the inflation data, CPI, WPI data, all these things are domestic events. Anything else, the moratorium news, the moratorium judgments are going to come out. The Supreme Court, does a lot of rulings. So all of these events are called domestic events. So if these domestic events are there, then Indian markets will follow all of these domestic events. Then we have to follow what the news is saying. But if there are no domestic events placed in a week, then we have to be a puppet and we have to follow the global markets, because no market moves in isolation. We always move in sync with the global market. So just to reiterate, if there are domestic events in the country, then we will place more importance to those domestic events and trade accordingly. But if there are no domestic events in the country, then we will focus on what the American markets, what the UK, what the German markets are doing. If they are going higher, then Indian markets will be likely to go higher. If they are going lower, then the Indian markets will be going lower the next day. I hope that concept is clear. That's the basic rule of thumb. Now, let's move one step forward. We also need to track something that we called SGX Nifty. That's a very, very important thing. A lot of you probably already know what it is, so you can skip this part. But if you are new in the market, it is a very, very important concept. Let's get right into it. So SGX Nifty, what is the ticker for it? The ticker for it is IN1 exclamation. So you can search in the watch list. Otherwise, you can just search for Nifty futures and you will see the SGX Nifty will be coming up. This one, the IN current contract. That is the SGX Nifty. You can see the Singapore flag. What is SGX Nifty? SGX Nifty, I will try to explain in the most basic language. SGX Nifty is the Singapore Nifty, which means your Nifty contract which is being traded in Singapore. Before I get into Singapore Nifty, let me first make things very easy for you. I am a company, let's say ABC. I want, for example, let's take a live example. I am a company, Larsen and Toubro. This is my company. I want to raise some money. I have a lot of projects lined up. I want to raise some money for these capital intensive projects. What can I do? First option is I can take a bank loan. I can go to a bank and take a loan. Fine, I take 1,000 crore bank loan. But can I keep on taking a bank loan? There is a limit. The bank is going to say no to you. What else can you do? You can, if you want to raise more money, you can get listed in the stock exchange. You get your stock listed, you get the shares listed in Nifty, in Bombay Stock Exchange, wherever you want it to be listed, so that people subscribe to your shares, they become part owners in their company, and they are your shareholders, and you can raise money from them. It's basically like that. So that is another way what the markets can do. Now the question is, can the companies raise money in America? Can the companies raise money from UK? Yes, they can. So if Larsen and Toubro now, rather than raising money from India, they want to raise money in America, they can do that. They can get listed in the American Stock Exchange, which is the NYSE, etc. They are allowed to do that. They have some formalities, but yes, you can do that. There are companies currently which are listed in America, which we'll talk about in a minute. So now, what are the American companies called? Any American company which is listed is called, for example, if I take the example of Apple. Apple, the full form of Apple will be Apple Inc. INC. In America, INC is the code if you get listed, a public company. In India, that same code is called Limited, Reliance Limited, Larsen and Toubro Limited. So if Indian company gets listed in America, they are not going to be called L&T Inc. But they will be called, for example, L&T ADR. This is a concept most of you will know. I'm putting it in the most simplest form available. So if L&T, Larsen and Toubro gets listed in America, they will not be called L&T Inc., but they will be called L&T American Depository Receipt. If L&T wants to get listed in UK, then they will be called L&T GDR, Global Depository Receipts. These are two things I want you to understand. So if I want to raise finance from other countries by getting listed in the stock exchange, I can do that. ADR is for America, GDR is for UK. Are there companies which are listed there? Yes, they are. Can you keep a track of it? Yes, you can. What you can go is go to moneycontrol.com. If you do it on the phone, it's quite easy. I have currently not seen it from the website, but I will try to find it for you. You can just go. First option is go to the global markets, click on view global markets. This way you can see all the global markets and keep a track. Also, if you remember, I told you to keep a track of the indices. Here you can see all the indices, Nifty, IT, small cap, mid cap. So all of this you can keep a track and add to your watch list. For the global markets, click on view all global markets. Another tab will open up and you can see over here, what is NASDAQ doing? FTSE for UK, CSE for France, DAX is Germany. These are the Asian markets. So where do you track the ADRs and GDRs? Right, here you can see right now, quotes, Indian ADRs. ADR, so what is listed? Dr. Reddy is listed, HDFC Bank is listed, ICICI Bank is listed. So how do you establish a correlation in them? So remember what I told you, American markets open at 7 o'clock. So it's about 6:45 p.m. right now on Thursday. So American markets are expected to open in 15 minutes. So when they open, these quotes will come up. Currently they are closed, so the quotes are not coming. So for example, let's say when these companies open, ICICI Bank ADR is trading at 1% higher. So what will that mean? If ICICI Bank ADR trades 1% higher, this will mean that tomorrow even ICICI Bank in India is expected to trade higher. Hope that makes sense. Why? Because right now ICICI Bank is an Indian company. The Indian markets have closed. So any news that happens now, when will it be impacted? In the Indian markets, it can only be impacted the next day. But the American markets, they will be live. If any news comes up and ADRs of ICICI Bank or Infosys, they start trading higher, this will mean some positive sentiment has come into the market. So it is expected even tomorrow, they are expected in India to trade higher. So you can expect that. The same time, for example, if ADRs or GDRs, they are trading lower. If let's say today, Dr. Reddy ADR trades 2% lower. So it can be expected that even tomorrow in India, Dr. Reddy will be in selling pressure. It can be 1 to 2% down in the opening session of Indian markets. That is one thing how to track ADRs. With this correlation, let's try to understand the SGX Nifty. What is SGX Nifty? SGX Nifty is your Nifty. The Nifty, the Indian Nifty contract being traded in Singapore Stock Exchange. Try to establish the same concept how I've told you about the ADR and GDR. So SGX Nifty is Indian Nifty being traded in Singapore. A lot of people ask me, is it a good, can I trade in SGX Nifty? So for example, in India, you can trade in Nifty through derivatives, futures and options. You can do that. And if you are a trader in this segment, you know very well that one lot of Nifty is 75 quantity in India. But SGX Nifty does not trade like that. So for example, currently SGX Nifty is around 12,600. So if you want to buy SGX Nifty, it is not like you have one lot. You have to pay 12,600 into multiply by $2. That is how. So this will come up to about $25,200. That will be one contract of SGX Nifty. So they are a little bit different. And so coming to the question, can you trade SGX Nifty? You cannot trade SGX Nifty. It is a liquid contract, but as per rules, as per law, any Indian resident, if you are an Indian resident, you cannot trade SGX Nifty. If you are a non-resident, then you can trade SGX Nifty. Then you are allowed. Now we have understood what SGX Nifty is. It is the same Nifty being traded in Singapore. So obviously any news coming into Nifty will also impact SGX Nifty. Now let's understand why it is important and how we can use it in the markets. Firstly, what is the timings of Indian Nifty? If I talk about the Indian Nifty, the timings are 9:15. It will, oh, sorry, I'll just, my mouse is hanging a little bit. I'll just write it again. The Indian timings are 9:15 all the way to 3:30. This is your Indian Nifty, Indian market timings. The timings for your SGX Nifty, this is very important. They are about 7:30 a.m. Indian Standard Time in the morning to about 2 a.m. in the night. So you can see Indian markets are traded only for 6.5 hours, whereas the SGX Nifty is trading for more than 17-18 hours. That's the beauty about SGX. So during the market, because both of them are same, both of them are Nifty, during the normal market hours in India, you will see that both of them will trade almost at the same price. So if Nifty, for example, right now is 12,690, even in India, when the markets are open in India, even SGX Nifty plus minus 10 points will be trading because both of them are same. As simple as that. If both of these indices are the same, they will be trading at the same price, no matter where you are listed. Now the beauty is what happens after the market. Let me give you a very simple example. Let's take today's live market example. So currently, today Nifty closed at what price? Today Nifty has closed at 12,690. All right, 12,690. Nifty closed at 3:30. Perfect. Now, any news that comes into the market, when will it be impacted in Nifty? So let's say positive news comes, you will only see the impact on the next day because currently market is shut. So tomorrow morning when the markets open, you will see how the markets react to that positive news. But what if I said I can give you an insider way of understanding? You can see the SGX Nifty and you can see what is this global sentiment like. So currently, what is the SGX trading? It is live because the market is open. So currently, the SGX Nifty is live. It is trading at 12,667. So the current price, can you see, is about 30 points lower as compared to the closing. This means that some kind of negative sentiment has come, some negative news came into the market after 3:30. Our Nifty will be impacted when? Only the next day. But SGX Nifty has already shown that there is some negative sentiment by around 23 points. 23-point negative sentiment. So it is expected that tomorrow, because SGX Nifty is trading lower, it is expected tomorrow even Nifty is going to be opening with a little bit of a dim perspective. I hope this is clear. Now, a lot of people ask me, can I just look at this and decide my trading? No, you can't. The best way, I would say, the best time to look at the value of SGX Nifty will be 7:30 a.m. in the morning when it opens. For me, that is the best time to decide what the markets are planned to do. Why am I saying 7:30? Because if I see it right now, it's around 6:70. When the US markets open in the next 9 minutes, the SGX Nifty value might change because markets are open. So the value of SGX Nifty, depending upon the global sentiment, the global news events, will keep on changing. I will always suggest try to see what the value is maybe in the night if you are awake at 12 o'clock, or I would say the best time is 7:30 a.m. in the morning, because every American announcement, maybe Trump wants to give an announcement, any announcement will be impacted when? Only at 7:30 a.m. when it's in morning in India. So just to give a recap, what I've discussed so far, SGX Nifty can give you an idea. Do not solely base your trades on that. Just because SGX is lower, you will open lower. Don't do that. It will give you an idea where you are expected to do, what you are expected to do in the market on the next day. Currently, the market lacks luster, so you can see it is going to open on the downside. If let's say right now SGX Nifty starts trading 100 points higher, you can expect even tomorrow in the Indian markets 100+ point gap up opening. So this can help you to decide whether tomorrow are you opening gap up, are you opening gap down, or are you opening flat. Looking at the current data, it looks like tomorrow markets will be opening on a gap downside, a very small 20-point gap down. I hope that concept is clear. That's all about SGX Nifty. Also, I want you to track two more things. One of them is very important. I call it the dollar index. This is called the DXY. The ticker is DXY, the US dollar currency index. Very, very important. I want you to understand this concept. This will make you a fine trader if you understand this concept. SGX is one concept, this is another concept. Okay. What is the US dollar index? The ticker is DXY. Go on the plus icon, click on DXY, and click on this one, the CFDs, the US dollar currency index. Right. What is that? What is the currency index? Basically, this is telling you how is the US dollar doing, how strong is the US dollar against 6 major currencies of the world. Basically, the US dollar currency index, as known as the DXY, telling you how strong is the US dollar as compared to the 6 major currencies in the world. What are these currencies? Number one, the the Canadian dollar. Number two, the UK pound, the euro, the Japanese yen, the Swiss franc, and the Swedish krona. These are the 6 currencies. I would say there are 6 countries with which US has a lot of trade relations going on. A lot of trade from all these countries is coming into the US, which basically makes up the major chunk of the trade with the US. So how strong is the American dollar against this 6 basket of currencies tells you what is the US dollar currency index. So this is basically a very good way to understand how the Indian markets or how the emerging markets will do. I'll give you a very, very simple answer. If the US dollar currency index is going higher, then the Indian markets, or I would say the emerging markets in India, will go lower. And if the US currency index goes lower, if it starts to fall down, then the Indian markets or the emerging country stock markets will go higher. I'll give a very, very simple example. I will not involve any economic example. Very simple example. You want to buy an iPhone. You want to buy it from America. The cost of the iPhone is $1,000, which is, let's say the exchange rate right now is $70. It comes out to 70,000 rupees. Correct. Now, if the US dollar becomes, more strong, you have to pay not 70 rupees. You have to pay 71. Let's say US dollar goes higher by 1 rupee. So then for $1,000, you won't have to pay 70,000, but you will have to pay 71,000. So your liability increases. Is it good for you or is it bad for you? Take a minute. It is bad for you. Same is the case here. If the market, if the US dollar currency index goes higher, dollar becomes strong, people pull out their money from the Indian markets, and markets in India, they do fall. If the dollar currency index goes down, then markets in India, they become higher. I will show an exact correlation. Let me open the chart of Nifty. At the same time, let me also open the plus symbol and compare the DXY US dollar currency index. You will see the exact correlation now. Okay. Let me do the other way. I think it won't be clear from this. Let me open the dollar index chart, and now let me compare it with the Nifty chart, the Indian market chart. I think this will give us, yes, this will give us a better idea. So you can exactly see today, currently, you can see the US dollar is falling down. And that is the reason why the Nifty index is starting to go higher. You can also exactly compare why did the Nifty index from this point of time started to go higher? Because the US dollar index from this point of time started to go lower. Why is Nifty from this point of time going higher? Because the exact same point of time on the US dollar chart is starting to go lower. So right now you can see exact correlation, how both these things are affected. I'll give you one more example. Why is the Indian markets falling from this point of time? Because the US dollar currency index made a low and started going higher. So you can see the exact correlation between these two asset classes, I would say. I hope this is also clear. Example is clear. So I would say, I would like you all to go to the dollar index, put it in your watch list and track what it is doing. Because if dollar index, let's say, goes lower, then this will mean Indian markets keep on going higher. So that's a very good way where you can use your economic analysis and forecast where the markets are poised to go in the future. A couple of more important points before we get into the training. I also want you to understand the relation between crude oil and your paint stocks, because these are some relations that through experience we have seen work a lot. Crude oil and your paint stocks. What are the paint stocks in India? Asian Paints, that's one of the main companies. Berger Paints, Nerolac, or any other companies which use crude oil. So to illustrate this example, I will have to open the charts of crude oil. So you can click on open the charts of crude oil, and at the same time, I will compare Asian Paints with crude oil. I will try to show you the exact correlation between these two these two asset classes. Have a look at this. Before I get into this, understand why I'm showing you. Asian Paint is a company which manufactures paints. What is the raw material of paints? The basic raw material of paint is crude oil. With crude oil only, so they have to import crude oil to make the paints. So tell me a very, very simple question. If crude oil becomes expensive, is it good for Asian Paints or bad? Very simple. It is bad for Asian Paints. Why? Because if crude oil goes higher, the Asian Paints needs crude oil. That input cost goes higher, so their profits margins contract. Very simple example. Let's say crude oil costs ₹1 and Asian Paints sells the final product for 10. So what's the profit? 9 rupees. Now, if the crude oil price goes from 1 to 5, Asian Paint still has to sell it for 10. The profit contracts to 5 rupees. So they made a loss of 4 rupees. I hope you understand the exact correlation. You can see in this example very, very well. When the crude oil started to go down, you can see very well the Asian Paint stock started to go higher. Very, very simple. You can see the current example. When crude oil started to trade higher, Asian Paint stock made a high and started to trade lower. That's the exact correlation I can tell you on the charts of crude oil and Asian Paints. you can use analysis like that to help you out in the markets. Another analysis that I would like to talk is the American dollar and your IT companies. So very, very simple. Open the DXY index again. So I've already told you about the NASDAQ companies and the IT companies in India. Let's talk about the DXY. So can you see the DXY right now is in the dollar has fallen down. It's trading in red. That is the reason. If you see the IT companies, Infosys, it also turned red. Also, if you see the charts of TCS, it will also trade in red. You can see the charts of TCS, that is also in red, about 16 points or lower. Why is that? Very, very simple. The IT companies in India, your IT companies in India, they have majority of the business in America. So the revenue that comes to the IT companies will be in US dollars. It's very, very simple. Currently, the dollar is trading at 70, for example. And if let's say the dollar becomes weak and it goes to 72, correct? If the dollar becomes strong and the rupee, I'll give you an example. Currently, let's say the dollar is at 70 rupees, and now this dollar later becomes 72. So basically, dollar becomes strong, Indian rupee becomes weak. So don't you think the IT companies will get their payment? They will ask the other companies to give their payments. Why? Because just by sitting and doing nothing, they have this exchange difference with which they can make money in the market. Correct? So if the dollar becomes weak, this will mean that from 70, dollar has gone to 69. Dollar is becoming weak. So if dollar becomes weak, if they were due $1,000 by a company, this was 70,000. Now that same amount is 69,000 rupees. So there is a 1,000 rupee loss. So just by using this analysis, you can see very well, if dollar becomes weak, that is why even the IT companies will start to fall. That's an analysis also you can do in the market. I hope this is clear. So that is all about the global markets that I want you to track. By keeping this track, this will help you to stay one step ahead in the market. It will always help you out with better analysis rather than just analyzing the stock that you want to trade. If you have any doubts, we'll talk about it on the weekend, or you can WhatsApp us on our numbers for instant reply of your queries. Thank you so much.